Welcome to RP Data's update on Australian housing market conditions from May 2013. Last month we saw dwelling values fall by 0.5% across the combined capital cities index. That's following a 2.8% increase over the March quarter. Most other indicators do remain positive, however, and we do expect that the Australian housing market will continue along a measured recovery path over the remainder of 2013. The weak April results contrasts with most of the other indicators in the marketplace, which still remain positive, which leads us to believe the April decline is likely to be more indicative of a seasonal pullback rather than an indication that the recent recovery trend is over. Auction clearance rates have moved higher over the month of April, with the weighted average clearance rate remaining around the 65% mark. In Melbourne and Sydney, which account for more than 80% of capital city auctions, the clearance rate's been closer to 70%. We're also seeing transaction activity rise from the depths, which means buyers are starting to become more active. After activity fell to levels not seen since 1996, total sales nationally over the past 12 months were 2.1% higher than the previous 12 months. Growth in transaction numbers is largely being driven by Perth and Brisbane, where the annual number of sales has increased by 26% and 10% respectively over the past year. It's important to note that both these markets are showing a rise in buyer numbers from a very low base. However, the increase in buyer demand is still very positive for these two areas. As an update on where each of the capital cities are in terms of their previous market peaks, on average, capital city values need to see a further 3.6% in capital gains before reaching the previous market peak in values, which was set back in October 2010. Sydney reached a new market high in March. However, with values down 0.4% over the month of April, Sydney values have once again moved 0.4% below that peak. The largest gap between current values and the previous market peak can be found in Hobart, where values remain 11.5% below their peak, and in Brisbane, where the market needs to see a further 10.2% increase in values before staging a technical recovery. The index for Adelaide showed a sharp lift in April, up 2.8% for the month, which is likely to be more reflective of volatility rather than any substantial rise in values over the month. The market trend is broadly showing a gradual recovery underway, with values 4.4% higher compared to July 2012. Transaction volumes across the city remain relatively flat at a level which is about 14% below the 5-year average. Rental markets have remained relatively flat as well, with rents up 1.5% for houses and 1.1% for units, providing a gross yield of 4.3% and 4.7% respectively. This month's viewer question comes from Michelle on the Sunshine Coast. Michelle is wondering why first home buyers are so few in the marketplace at a time when prices and interest rates are lower than what they were several years ago and rental prices are higher. It's a tough question, but I think it comes down to a number of factors. Probably most important is the fact that first home buyer demand has been tampered with a lot over the past 4 years. The doubling of the first home buyer grant for established homes and the tripling of the grant for new homes back in late 2008 through to late 2009, when the boost was initially scaled back, we saw first home buyer numbers rise from about 17% of the market to more than 30%. As the boost was halved and then removed, first home buyer numbers fell back only slightly lower than their pre-stimulus levels. The fall in first home buyer numbers was compounded by the rising interest rate environment as well. Subsequently, a variety of state government incentives, including stamp duty concessions and state-level grants, provided further stimulus for first home buyers that saw regional spikes in activity. In today's market, where we're no longer seeing the same level of stimulus aimed at first home buyers, all state-based stamp duty concessions apply only to new dwellings rather than established dwellings. All too often, the price points of these new dwelling locations aren't appealing to prospective first home buyers. It's a challenging situation for all involved, including buyers, developers, and the government. Thanks for tuning into RP Data's YouTube channel. Tune in next month for an update of how the housing market transpired over the month of May.